Hey and welcome to this video. We're just about to jump into multi timeframe analysis, and this is going to be on the dollar index. We cover this quite a bit within our course, so if you have an idea of what it is, you've read through the course, then you'll understand this. If you haven't, or you don't understand this, then I'll leave links in the description below so you can go check them out. And yeah, let's get started. So we're going to jump into, this is the yearly chart, so 12 months. And what we can see here is a very clear candle, and let me hide that stuff for a second. So a very clear candle of basically an outside, almost like an outside reversal, and a pin bar type of candle. Now it's like a fat pin bar, and as you can see, the price, it came down. Everyone thought this was going to just collapse much further. So as it broke these lows, people will have started to sell their positions, any dollar holdings, and this is what's known as a tree shake. So the tree got shook, so to say, and anyone that was holding will have been selling all the way down to here, where there will have been a lot of buying power down in this area. Now the next part is the Fibonacci area. This is what caught our attention quite a bit as well. So it's a nice 0.618 pullback and retest, as well as the 0.5 obviously. So a really nice candle and a really nice Fibonacci pullbacks. And if we jump down into the quarterly chart, we can see it a little bit more clearly. There's now a zone of support, which I'll draw in now. So it's roughly 88.5, and let's draw that in to 90 area. And as you can see here, it's pretty clear as to why it's an area of key support. You can see it got tested here, resistance, broke above here and never got retested properly until here. So it broke above, what, almost 4 years ago? 4 years ago, almost to the month, the quarter. And you can see this is a pretty key area for people to try and get long. And reason being is those who missed out in this breakout will have probably been having orders sitting in here. So this would be like institutions and whatnot. They'll all be looking to go long on dollar on any strength or any pullbacks. So at the minute, overall, this is still a strong-ish chart. It's not the strongest. It looks much stronger back here in October 2016, but then got firmly rejected. Now if we jump down to the monthly, starting to show up a bit more clearer, as you can see. So we had a fake out here, it was tested resistance, breakout, and then it was just didn't happen, so it's called a fake out. Broke back down below, came back up, retested the area as resistance, came back down, came back up, retested again resistance, and there was nothing for about 4 years, almost 5 years, and then we had a surge and break above and no retest until February of this year, where a lot of traders obviously were looking to get in. A lot of institutions are looking to buy the dollar, and yeah, that's pretty much how we're looking at it right now. And let's jump down into the weekly. Now within the weekly, you can see much clearer, these wicks as to what's happening. So you can see the breakout, the fake out. This is actually a nice little head and shoulders pattern here. See left shoulder, head, right shoulder on this resistive area. And then, as we can see here, it did look like it was going to break down much further. Once we broke from this sort of area here, momentum to the downside was increased, had some resistance up here, and we came back down to the 88, 89 area, where it consolidated for, what, about 10 weeks, and it basically just done nothing. Everyone would seem to be accumulating, then it just started rallying, and then breaking above this area after retesting it as resistance, trapping shorts, breaking higher, coming back down, probably trapping shorts even further. This is what we need as fuel to the fire. So we then have a nice little trend line forming here, so it's a nice triangle type pattern, as you can see. We've recently just broken above it. Now what we could see is a pullback and retest the area again and then could see further highs, all being well. If there's any negative news from the Fed or anything in America, this could obviously invalidate the sort of trend that's happening right now. But if the trend continues, this could be something that will continue into 2019, 2020 as a pretty large bullish run. So continuing on from this run here, as you can see, pullback, consolidated, and then just sort of running massively. If we were to see a similar sort of move, it could take us to possibly 116, 114, this sort of area within the next couple of years. And you know, there are different methods in which we're looking to capitalize on this through different currencies, and yeah, we're just going to be posting about those within our blog posts. Any questions, let us know, and we'll speak to you soon.